Hey folks, Joey Virga Realty coming to you. I just shot a quick video a minute ago and I'm shooting another one, and this one's going to be about a quick little hack that you can do. It's nothing illegal hack by any means, but the way you could ping the credit bureaus to register as much information as possible about your payment histories and everything. And I probably have this conversation, once if not twice a day, every day of my life with a customer. But basically what you're wanting to do is get a credit card, a prepaid or a regular credit card if your credit is good enough, some type of credit card. Step one. Step two is do not use over 20% of the balance. So if they give you a credit card and you have $100 available credit, do not spend over $20 a month. Let the statement post where you owe the $20 and it comes to you in your mailbox. Then when it comes to you, then get online or write a check, however you do your business, get it paid, but do not be late. That's so important, because you could be really trying to help your credit out, and if you let it sit in your inbox too long, or your mailbox, it's funny, you let it sit in your mailbox too long and you don't get it paid and you have a late payment, all your hard work could be for nothing. So the payment has to be made on time, but not early. You got to wait till it posts. That's step one. Now, a credit card, the most common name for a credit card is, the most common name for a revolving line of credit would be a credit card, and that's revolving. So if they give you 100 worth of credit and then you spend 50, you only have 50 left of credit. But when you pay back the 50 that you owe, then you're back at $100 worth of credit. So it revolves, it moves. As you spend, you lose credit. As you pay it back, you get it back, and it's revolving. And the most common form of a revolving credit is going to be a credit card. So a lot of times the mortgage companies and the banks and everybody, they want a revolving line of credit history. So every month you spend 20%, then when the statement posts, you pay back the 20%. And that's a revolving. Sometimes I've heard too, because I've talked to a lot of different lenders, and just being in the business that I am, I'm not licensed in this, nor do I, have a degree in this, or I sell this. It's just I've been around the block enough, and I've seen enough scenarios, and God knows I've talked to enough bankers. So with that being said, the other type of loan is an installment loan. The most common installment loan that's out there is a car loan. You borrow $5,000. Yeah, I wish cars were that cheap, but you borrow $5,000 to get a car from the bank. I'm just making this up. 2 or 3 months later, you'd say, hey, I ran into an extra $1,000. I'm gonna go in there and pay down the car loan. So you pay it down to $4,000. I'm just hypothetical numbers here. Then you now, instead of owing $5,000, you only owe $4,000, but it doesn't revolve back. You don't have an additional $1,000 worth of credit that come back to you. So it's just an installment set to pay off by a certain payoff date when the payments are made, or you pay down the principal. But it's two different types of loans, and from what I've heard, the credit bureaus and the mortgage folks, they just love seeing good payment history and you having a type of revolving account, aka credit card, and then or you having a installment loan and you having an installment loan. So you have one revolving, one installment. You've got basically the best of both worlds there. So you're showing them you got two different types of loans and you're being responsible. If you do not have a car loan, which is not a bad thing, you can sometimes go into the credit unions around town and possibly get you a like a signature loan, maybe for $1,000 or $500. If your credit is not good, you're going to have to do a secured loan to get an installment loan, or a secured credit card, and those will work fine as well. You just have to have money when you start. So if you go get a secured credit card for $300, you got to give the banker $300, and then they turn around and they give you a little plastic card that's got $300 worth of credit. So you give it to them, they give it back to you, you make monthly payments on your money. They charge you a little hit of interest in exchange for pinging these credit bureaus and boosting your credit score up. So it really is it's kind of a no-lose situation. So, but that's kind of kind of the gist of it here. It's a pretty easy thing to do. And if you guys have any questions or whatever, you're all more than welcome to, you know, hit me up on Facebook, or, you know, send me a private message or whatever you like. But I'm trying to get together some videos here of some content that people are wanting to read about and learn about. But with that being said, y'all got to reach out to me on Messenger and just kind of let me know what you got. And I'll do my best to get that posted as quickly as possible. So thank you so much. I hope you guys have a wonderful day.